Millionaires are often seen as different, smarter, luckier, more connected. But their real advantage is much simpler. They follow rules, not complicated strategies, not secret opportunities, not hidden systems, just clear financial rules, applied consistently over time. And that consistency changes everything. Because wealth is not built in one decision. It is built through repeated behavior, small actions, done correctly, again and again. The first rule is spending discipline. Spend less than you earn. No exceptions, no shortcuts, no rationalization. Because income alone does not create wealth. Control does. Every dollar that is not spent, it becomes an opportunity to build, to invest, to grow. This creates surplus. The foundation of wealth without surplus. There's nothing to build on. No investments. No assets, no system. Just income and expenses. Repeating endlessly. The second rule is consistent investing. Money must be put to work, regularly, systematically, without waiting for the perfect time, because perfect timing does not exist. Markets move, conditions change, uncertainty is constant. But consistency removes uncertainty from your behavior. You invest anyway, week after week, month after month. Year after year, this builds momentum. Small investments begin to grow, returns begin to appear, and then compounding begins. Quietly at first, almost invisible, but powerful. Because compounding does not just add growth, it multiplies it. Returns generate more returns. Growth accelerates over time, but only the system is not interrupted. The third rule is avoiding bad debt. It's not all debt is equal. Some debt builds assets, other debt destroys them. High interest liabilities, credit cards, uncontrolled loans. These work against you. Interest compounds. But in the wrong direction, instead of building wealth, it drains it. Slowly, consistently, silently. Over time, it erodes progress, cancels growth, and resets your system. The fourth rule is protection, because building wealth is only half the process. Keeping it is just as important. Risk is always present. Markets fall, assets lose value. Unexpected events happen without protection. One event can undo years of progress. Diversification reduces exposure. Spreading investments across assets, stocks, funds, businesses, different sectors, different risks. This prevents a single failure from destroying everything. It creates stability, not perfect safety, but controlled risk. The fifth rule is long-term thinking. This is where most people fail, because the world rewards speed, fast results, quick gains, immediate outcomes. But wealth does not work that way. Millionaires do not chase quick wins. They avoid short-term noise. They focus on sustainability, on steady growth, on long-term outcomes. Because short-term thinking creates volatility, emotional decisions, inconsistent behavior. It's losses that could have been avoided. But long-term thinking creates stability, clarity, confidence. It allows the system to work without interruption. These rules are simple, clear, understandable, but not easy. Because they require discipline and consistency. Over long periods of time, most people break them. They spend more as income grows. They delay investing. They chase trends. They ignore risk. They act emotionally and slowly. The system fails, not because it does not work, because it is not followed consistently over time. Millionaires treat these rules differently. They follow them without exception, through uncertainty, through market changes, through personal challenges. They do not adjust the rules. Based on emotion, they adjust their behavior to match the rules. And this creates a system where money flows efficiently, where investments grow steadily, where risk is controlled, and where wealth accumulates. Over time, three key insights emerge. First, wealth is built on simple rules, not complexity. Second, consistency matters more than intelligence, more than timing, it's more than luck. Third, discipline separates outcomes, not knowledge. Because most people already understand these rules. They've heard them before. They know what to do, but very few apply them consistently. That is the gap between knowing and doing. Wealth is not created in a moment. It is built through repetition, through systems, through behavior. Repeated over time, the question is not whether these rules work. They do. The question is, will you follow them? Because the system rewards consistency, not intention. If you want more insights into wealth systems, money flow, and financial strategies, explore more videos on Wealth Finance 61. Like the video, subscribe, and share your thoughts below.